Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, the net asset of my account is $70,671.62. Today's PL is a loss of 0.18%. And let's take a look at today's change. Today, Apple has closed up 3.26%. And SQQQ closed down 4.15%. SPY closed up 0.89%, and United Natural Gas closed down 4.47%. Today, the market generally closed higher. Dow Jones Industrial Average closed up 0.54%. Nasdaq Composite closed up 1.35%. And S&P 500 closed up 0.88%. Today, the tech industries closed with a gain from consumer electronics and semiconductors closing up more than 3%. Today, in terms of economic news update, Fed official Bostic reiterated that the first rate cut would be possible in the first quarter of this year. Although the president is waiting for more evidence about inflation is moving back to 2%, he believes that it is sufficient for the Fed to make an interest rate cut decision in the earlier part of this year, and then watch data evolve as well. With a vote in monetary policy decisions, he said he would be open to acting earlier if inflation fell much faster than he expected. But he reiterated that he was still looking for more evidence that we remain on this trajectory toward the 2% target. The worst outcome, he said, would be for the policymakers to lower interest rates and then have to raise interest rates again because inflation is stubborn. He expects the road to be bumpy, but however, it's not the reason to be disencouraged and be overly too careful to the point that it hurts the economy. He believes that because of the lack of U.S. economy in response to the monetary policies, therefore, it is legitimate to leave rooms for the U.S. economy to start showing some signs of recession, but before that, the monetary policy and the Fed can start coordinate to prepare for the next business cycle. The FOMC is expected to have the benchmark interest rate unchanged during its January 30th to 31st policy meeting. Bostic is one of the last officials to speak before the quiet period when the meeting begins. Quarterly projections released by Fed officials in December suggest that people expect a 75 percentage points of rate cut in 2024. They also expect an interest rate cut soon and a big cut this year because policy actions should be carefully calibrated and should not be rushed. However, market implied that the probability of a rate cut in March has fallen significantly since its speech. Bostic was also one of the more dovish Fed officials seen last year. He repeatedly calls for keeping interest rates higher and longer to ensure inflation returns to one of the two committees' 2% target. And let's take a look at JP Morgan Chase. In its report released by the research team at JP Morgan Chase this month, the Fed needs to keep bank reserves at a high level to ensure liquidity in the financial system. Therefore, The Fed will be talking about slowing quantitative tightening in January to avoid the repeat of a liquidity crisis, announcing in March that it would start slowing the balance sheet in April and stop in November completely. This is the expectation for 2024, and at the same time, JP Morgan Chase expects the Fed to respond to coordinate supply with GDP ratio at around 10%. And when QT ends in late November, the Fed's overnight reverse purchase tool remain at a level sufficient to keep money markets smoothly. The Fed's cap on U.S. Treasury cuts will be cut from $60 billion to $30 billion, and the $35 billion monthly mortgage-backed securities cap is not expected to change. The balance sheet in 2024 was reduced to $420 billion, lower than the previous forecast of 720 billion yuan. This will help address the structural supply and demand. $720 billion. This will help adjust the structural supply and demand imbalance in the federal bond market. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.